Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Welcome to the ISE FX Options Weekly Outlook for the 9th to the 15th. I'm your host, Jason Ayres, founder and president of OptionSource.net. As always, we're going to start with a look at our weekly U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. As you can see here, we appear to be consolidating within the 86 to 88 focal area. When we actually look at a daily snapshot, it does appear as though a bull flag may be forming. Recognize that the 86 to 88 is still a key area of resistance. However, a break above this area leaves the window open for us to test that 90 to 92 focal zone that we've been talking about for the last several weeks. Any rejection in this area is likely to meet with support down in that 80 to 82 focal zone. All right, let's take a look at our first ISE FX options pair value, the CDD, the U.S. versus the Canadian dollar. After a strong rejection off of the 130 to the 133 focal zone, we were looking at the 119 to the 121 area as a logical support for a downside move. We did suggest, however, that a break below that would likely find lower support in at the 115 to the 117. As you can clearly see here, we bounced off of that 115 to the 117 area to close on the lows of Friday's price action. At this point, any rejection here, and we're going to lower our downside projection to the 113 to the 115 area, recognizing that the pair value can still retest this focal zone and be at a technical support. A break back above this 119 to the 121 area would see us likely play to the 123 to the 125 focal zone as being your first near-term resistance, with an upside target, of course, back into this 130 to the 133 area. All right, here comes the YUK, the U.S. versus the Japanese yen. The 98 to 100 focal zone was our focus for an upside resistance as prices played off of that 93.5 to the 94 focal zone back last week. Now, any sort of a continuation of this rejection that's taking place over the longer time frame would likely see us play all the way back down into that. However, we have to recognize the importance of this 96 and 97 area. This represents a key retracement level of the previous move. Notice that also the formation of this bullish looking candle, which may see us play right back up into that 98 to 100 level for our next and important upside resistance level. A break above that opens up the possibility for a test of this 103 to 105 focal zone. Well, we're seeing an all too familiar pattern forming here in the EUI, the US versus the euro, as the pair value appears to be forming a sideways triangle. Although this pattern often represents indecision, it has resulted in a continuation of the inbound trend in many of our other pair values. With that in mind, the 77 to 78 focal zone was a key area of interest. We watched our pair values break below this to test a lower support, only to close back above. Now, this week we see a repetition of this showing a strong support at that 75 to 76, which will remain our short-term target for support. With prices closing back above this key area, the path of least resistance seems now to be back in to retest that 80.5 to 82 focal zone. Well, we saw a one-day test of our 59 to 60 focal zone in the BPX, the U.S. versus the British pound, and with a strong bounce, we watched our pair value break back above the 61 to 62 resistance level. Our outlook at that point was a possible retest of this 65 to 66 area, which is still a realistic objective. We have to recognize that if the upside momentum stalls at this point, then our 61 to 62 box remains a key target for support. Well, there's some interesting things happening on the AUX, the US versus the Australian dollar. First of all, we suggested that if the 150 to the 152 pair value didn't hold, we would likely see a test down into the 139 to the 142. As you can see here, that 139 to the 142 was indeed tested and offered support for a nice little bounce back into that 150 to the 152. Now, it appears that the pair value is having a hard time holding in this area, which opens up the possibility for another test back down into this lower zone. Of notable importance is the possible formation of a head and shoulders top, which would be confirmed on a break below this 139 or 142 level here. Now that would open up the possibility for a near-term test of the 130 to 135 area. Now if the AUX happens to hold at this 150 to the 152, then the upside move would likely result in another test of that 160 to the 165. Well, folks, that wraps it up for another ISE FX Options Weekly Outlook. I have been your host, Jason Ayres, founder and president of OptionsSource.net. Thank you very much for joining me here this week. We will see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To learn more about ISE FX Options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX Options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.